Top investments right now. This is May 2025. Hey everyone, it's Wolfgang. So there's a lot going on in the world these days. We need to invest. We always need to invest. I thought I would cover this because the unusual times that we're going through right now. There's a lot of different things that are going on in the world right now. So there are tariffs, brand new tariff issues we haven't seen in a long time, if ever, in our lifetime anyways. There's uncertainty about the economy. There are sticky high interest rates. In yesterday's video, I went down the list of all the countries that have lowered interest rates, everyone except the United States, basically. And so I wanted to cover what are better investment options in 2025 with this background, with the background of tariffs, uncertainty about the economy, sticky high interest rates. So there are some ways, there are some things to think about before you deploy new capital in investments, okay? The key ideas: choose investments in growing areas. Really focus on areas that are growing. And I will cover a couple of examples. Be open to both financial assets and real estate assets. There's a lot of opportunity in real estate that I'm going to get to. And consider investments that are not affected by tariffs. They do exist. So with this backdrop, tariffs, uncertainty about the economy, high interest rates, this is creating some options, investment options. And there's a lot of safety built in. And I just want to say at the beginning two things. Number one, this is not investment advice. Consult your investment advisor. And number two, personally, I don't invest in individual stocks. I don't recommend anyone invest in any asset, really, truth be told, but definitely not individual stocks. So if you'd like to do that, that's fine. There's nothing wrong with it. I just, me personally, I avoid it. Okay, so some areas that are going to fit into these key ideas. Number one, machine learning and AI. This is pretty obvious to most people. You know, there have been talks about cutbacks to the AI growth. I think that is misleading. I think AI is just at the beginning of the hockey stick curve towards the upside. Because think about where AI is now compared to where it was 2 years ago, 3 years ago, and then flip that script and think about where AI is heading towards over the next 1, 2, and 3 years. Lots of growth, lots of applications of AI, stuff we haven't even thought of yet. Machine learning and AI. So the clues for knowing that this is a good investment area that's growing, growing areas, is which industries are announcing layoffs. Which industries have announced layoffs? Healthcare, financial services, logistics, shipping, a lot of industries, but these are three big ones, especially healthcare. Healthcare is made a lot more efficient when you don't have to make a trip into the doctor's office. With the help of AI, healthcare. So all of these industries are benefiting from AI. So these industries that are investing in AI, they have the same earnings, lower expenses, because they're laying people off. So it's a sad thing that people are losing their jobs. There's just no question about it. I really feel for people who are being put out of work by AI. Is there anything you can do about it? You know, when I was starting my career, because I graduated with a computer science degree and I had an electrical engineering background also. In the back of my mind, I always noticed that technology was changing. The one thing that was consistent was every 18 months, there was new stuff coming, and some of it major. So you were always in this mindset of let's make sure we're looking out ahead and see what skills we need to acquire, and maybe do we need to jump off this train and go in another direction. So I think a lot of people probably do that, but it's going to be hard to avoid being displaced by AI if you just want to stick to your current job and you never want to change. I don't think that's rational anymore because AI is it's really taking off. So same earnings for these industries, lower expenses because they're laying people off. So those industries are becoming more efficient. That means they're good investments. Healthcare especially. Okay, so cybersecurity, so that was AI and machine learning. That's a growing area, right? It's affecting a lot of different industries, not just these. Okay, cybersecurity is another area. The cool thing about this is not really affected by tariffs because you're not shipping stuff into a port that's getting a tariff slapped on it when it reaches the port. Cybersecurity services and software, generally, you know, they're not shipped goods. They're accessed over the internet. So they're always needed too. Not shipped, always needed. And this is an ETF. This is just one example of a cybersecurity ETF, CIBR. That's not an individual stock. That's an ETF, an investable exchange traded fund for cybersecurity, that industry. Is it growing? There's a steady growth curve. It's not growing like AI is growing. Cybersecurity always grows, but machine learning and AI, people really don't know how steep this hockey stick is going to be, the hockey stick curve, the growth rate. We really don't know yet because more and more capability is added to artificial intelligence constantly. But cybersecurity does have growth in it. It's always going to be needed. So that's a good area to think about for investments in the current market because not really subject to tariffs. Okay, healthcare. Healthcare is investing in AI. And most importantly, there is a tidal wave of retirees, the baby boomers. Because using AI, no in-office visits are needed. And all these people retiring. Probably it's very important to point out that healthcare in the United States, okay? Healthcare in the United States, because was there a baby boomer generation in other countries? Maybe, but definitely there was in the U.S. So healthcare in the U.S. Fits into these categories. Not really subject to tariffs. It's local, right? It's not shipped, and they're investing heavily in AI, so it's becoming more efficient. Same earnings, lower expenses because they're laying off staff. Because if you can get your patients to learn about all their treatment options with artificial intelligence, which is happening now, that avoids a lot of in-office visits, and so fewer staff are needed for patients. Okay, so the next one's probably obvious. This is a financial asset, precious metals. Okay, gold and precious metals. There's a lot of uncertainty in the economy right now, right? A lot of uncertainty. Gold is up $1,000 in just 1 year. That is huge. I can't tell you how impressive that is because for a very long time, gold was very stable, not really moving around too much. It's up $1,000 in 1 year, $1,000 an ounce. It's about $3,300. A year ago, it was about $2,300. So gold and precious metals in these times, uncertainty in the economy is driving that and making that a reasonable investment. Okay, so another option is real estate. Now, compared to some of these others, most of these you can invest as a financial asset in an exchange traded fund, or if you prefer individual stocks, you can go that route. If you want to hold physical gold or silver, you can do that too. Real estate is a lot more involved. I'm involved in real estate, among other things. And, the degree of feeling taxed by the amount of effort that real estate requires is completely different from purely financial assets like precious metals, stocks, ETFs, treasury bonds. Real estate is a bigger deal, okay? But the cool thing about real estate, tax breaks. You get lots of nice tax breaks, and real estate generally tends to go up in value every year, and it produces income. So gold does not produce income. Real estate produces income. So right now, there are a lot of options for real estate investing because, and I covered this yesterday in the video from yesterday, owners are not able to refinance their prior debt because, real estate commercial loans are about 10 years in duration, right? And 10 years ago, in 2015, what were interest rates like? We were in the middle of zero interest rate policy. Interest rates were very low. So these loans that are coming due now, it's much more expensive because of these sticky high interest rates. Okay, that's creating an opportunity to buy distressed real estate because a lot of owners cannot roll over their debt and they're having to sell, sometimes at fire sale prices, their real estate. There's a lot of distressed real estate right now, but you have to be careful because, unlike gold or stocks or bonds, real estate is region specific. Okay, it's very regional and sometimes it's very hyper local. I was reading something today by someone in the real estate industry. He said that in parts of Phoenix, it's not a good time to invest because people are leaving. But in Scottsdale, which is one town over, it's a really good time to invest. So hyper local, you have to know the ins and outs of the regions. There's a lot of distressed real estate, but you'd probably want to avoid parts of Texas, Austin as an example, parts of Arizona. Apparently Phoenix, there's parts of Phoenix where people are moving away. California, Illinois, and New York. Most people are avoiding those states. I mean, the whole state. California, Illinois, and New York. So another option, this is kind of a cool one too. The energy industry. Okay, a lot of people know that crypto mining is energy intensive. It requires a lot of energy for crypto mining. Fact is, artificial intelligence uses 30% more energy than even crypto mining, and crypto mining is a huge drain on power. So there's an opportunity in the energy industry because of AI, because of the amount of power that AI systems use, even more than crypto mining by 30%. Let me see if I covered all that correctly. Oh yes, there's one other thing. Okay, so in addition to all this, foreign investments, offshore investments in other countries, that's always been an option, okay? But right now we have tariffs, this new tariff issue. So there is no tariff risk if you are investing in the US. So if you think about all these machine learning AI companies, cybersecurity, healthcare, all these asset choices, if you think in terms of the US, you're avoiding the tariff issue entirely because inside the US, there are no state-by-state tariffs. I mean, there are different fees, but it's nothing like 145% tariff that's being imposed on China right now. So a lot of good ideas here. So we're having a lot of changes in the environment. Tariffs, uncertainty about the economy, interest rates are sticky high. These are just some ideas about to think about in terms of where you might invest, where you might put new money to work. The only thing I would say, if you do invest in stocks, in the stock market, is it's still pretty volatile. And you should look at the VIX, the volatility index. If the VIX is over 20, there is a volatility in the stock market. So in terms of putting new money to work, I have been recommending, let's wait until all the tariff announcements are in the past by a month or two, and then think about putting new money to work in stocks. That's just me. That's my opinion. Reason being, if you bought into the market now and then some negative things happened, like, China and the US are supposed to be meeting in the next week. Let's say that goes south and, the stock market is going to tank. If that meeting wraps up and no progress has been made, and in fact, China says something belligerent, which they seem to do sometimes, the stock market is going to tank next week, right? So if you're thinking about putting new money to work, I mean, obviously, if you've already bought into the market and you hold, stocks or ETFs, then do you want to sell those? No, not necessarily. I'm saying in terms of putting new money to work, I've been recommending, consider waiting until all the tariff announcements and the changes being caused by these tariffs are in the past by at least a month or two, so that there's at least some, the stock market's always fluctuating, right? But if there's a meeting between the US and a trading partner and it goes bad, darn well the market is going to crash the next day. It's just going to, so if you put new money to work, you would suffer that downturn, is what I'm saying. If you have any questions about any of this, I'd be happy to answer any questions that you post in the comments. And I really want to thank everyone for watching. Have a great day.